everyone, and welcome to episode 39 of What to Think, VentureBeat's weekly technology podcast. I'm Jordan Ovett.
And I'm Kia Kokolacheva.
And today on What to Think, we'll be talking with Vineet Jain, a co-founder and the CEO of Egnyte, a company with file sharing software that runs on the cloud and companies' data centers. But first, before we get into that interesting conversation, we're going to go over some tech news highlights from VentureBeat. Here, without further ado, are three of our most interesting stories from the last week. So we start today with Slack. Last week, we learned about an interesting talk that Stuart Butterfield, the CEO of Slack, a collaboration tool, gave in Germany. And he said he didn't know why Slack had taken off while the last two startups that he was involved with didn't quite work out. And he literally said the following: "I get in trouble with my PR team for saying this, but I have no fucking idea."
Those are some interesting words from Stuart.
We blurred out fucking in the headline, but ultimately we got the point across and people have been loving this story. Kia, why do you think people love this?
Well, besides the fact that it's profanities and people just love a handful of bad words. That aside, I feel like here in startup land and tech company land, everyone that founds a company really likes to go around and say that, like, no one was solving this problem in this particular way. No one's font was that particular color, and that was like really the game-changing thing that would just solve this problem, and we did it. That's why we're like popular right now. But it's really not the reality. Like, Slack didn't create team chat.
Team chat. What else is out there?
I mean, there's like Yammer's been around, like we use Convo. There's all kinds of things, like Social Cast, all kinds of things have already been around. Mm-hmm. Slack did not create that. But for some combination of factors, it could be Stuart himself. It could be like the actual design that's just a little nicer.
It could be threaded conversations.
It could be threaded conversations. It could be the initial group of people that caught on and it just kind of spread. It was huge amongst like the developer community. They really took to it. And it's just a combination of factors that you sometimes don't really have control over. And I like that Stuart is not taking credit for it. And he's just saying, like, you know what? It happened and we're stoked on it and we keep working on it. But like, I'm not going to sit around and say that like, oh, I foresaw how to solve team communications and then I did it. And that's kind of an even wider sort of silent admission people have been making, especially in like social type products. You see all kinds of companies from Facebook to tiny shops that are just experimenting and throwing things to the wall and seeing what sticks when it comes to, chat apps or whatever, and just admitting that they don't know and they just have to try. So yeah, it was kind of a breath of fresh air to hear that from Stuart, that he's just admitting that it just kind of worked out. Yeah, so that's what to think. And then also, you should know that out here in San Francisco and in Silicon Valley, this software is quite popular. It feels like so many startups you randomly talk to say that they're using Slack. Yes, they are. So next up, we're going to talk about Microsoft.
Ooh.
Last week, Microsoft had a big day in Redmond. They invited a cabal of tech reporters. And one of the things they announced was a augmented reality headset. And Jordan here went up there and tried it.
Oh, yeah.
And wrote about it and experienced it, and then almost just didn't want to work after that.
I mean, it was a long day, to be fair.
But yeah, so it announced the Windows holographic at its event. And, I had a Minecraft demo that Jordan's going to tell us about. Mm-hmm. So Jordan, tell us, why did you not want to work after that?
Well, augmented, I think, is the key word here. This is something I learned. I should know that, but the games people had to let me know. Virtual reality is when you're totally in another world. Like you cover your eyes and you are taken away to Mario Kart land or something like that. That has no relation to what's in front of you in real life. Augmented reality is where you are actually having your real life supplemented with other things. And so in this case, the HoloLens device that you mentioned, it's goggles basically. There's a little screen that goes right in front of your eyes and you see things projected onto it in 3D. So when I was up there, I got a chance to try 4 demos, or I should say 3 demos and 1 demo that I didn't have the goggles on me for. And one of them was Minecraft, like you say. And basically in the Minecraft demo, there was this coffee table and there were these Minecraft blocks that went under and through and on top of the coffee table, like a pyramid of blocks. So the cool part was not only were the blocks there, but the coffee table was there. that part of the room was part of the demo. And it's possible to actually program things to be in and out of the situation that you're seeing on screen.
How much control did you have over what was going on in the demo?
I took my finger and did something where I tapped my index finger down and up again and was able to blow up some TNT. And then literally what happened is the real part of life that I was seeing in front of me, the coffee table, suddenly got a hole in it. And I was able to peer down through the hole that I had created with the TNT from Minecraft into like this lake that was underneath it. And I was able to poke my head out and see farther down with so much detail into the lake. And so suddenly it was this merging of reality and fiction, you could say, to create this awesome blend. And I said, I just want to do this for hours and hours and hours. I thought it would be so much fun. And I think that's going to be what is going to be more popular than virtual reality.
Yeah.
Because real life isn't that bad.
Real life is okay most of the time. So I feel like you just throw some Minecraft on top of it and hey, you've got a party basically. Tip from Microsoft, if you could create a data center demo for Jordan, he's going to be all over it.
Oh, yeah.
Just virtually go through data centers all day.
And have like Minecraft sticking out of some servers.
Yeah. I mean, that is how you win Jordan Novet's heart, just so you know.
Thanks. Thanks for letting them know. We are going to move on to something else. And it is related to startups, not big old Microsoft in Redmond. It all starts with POT, pot. Let me tell you, Kia, that Peter Thiel's Founders Fund dropped a fat bag of cash into cannabis private equity firm Privateer Holdings. I'm not sure if I'm pronouncing that right.
You are.
The whole marijuana industry exhaled a puff of excitement and hope. And finally, venture capital was beginning to take the pot industry seriously. Is that even possible? But of course, weed-loving entrepreneurs have been around since before that, and they've spawned plenty of startups. But like, there's this whole new spirit of excitement now, with regulations slowly moving in the direction of legalization or floating. We're likely to see more and more companies popping up, as far as I understand from your story. So tell us about a couple of these and tell me what to think about them.
So as you mentioned earlier, a couple of weeks ago, Founders Fund announced that they're investing in Privateer Holdings. And so, I mean, that was really like the kickoff of just serious venture capital going into the industry until then.
And how much money are we talking about, by the way?
Oh, man.
Figures?
So Privateer Holdings they had raised like 50 million out of 75 that they're looking for. And so
there's some.
Yeah, I mean, that's a lot of money. And so from what I understand, Founders Fund was putting in like a hefty amount of that into the round. They wouldn't say exactly how much, but probably like a significant chunk. So basically what we decided to do is to look around at the industry and see what else has been around, because, you know, tech-related startups that are in that industry have been around for like almost a decade. And so some of them we found, one that I thought was interesting was Weed Maps. They've been around for...
Did you say Weed Maps?
Yeah, Weed Maps.
Okay.
They've been around for mid to late 2000s, and it's exactly what it sounds like. It's, you know, it helps you find dispensaries and where, you know, different strains are available. And
do they have a mobile app?
I believe they do. Yeah, okay. It's kind of like a Yelp for cannabis.
Oh.
Yeah. And so what's really interesting is that they're not just that, because there's a couple of other ones out there like WikiLeaf and stuff like that.
Wait, WikiLeaf?
WikiLeaf, yeah.
Is that a Wikipedia for pot startups?
Pretty much. Well, for dispensaries.
Oh, okay.
And doctors. And similar. And so does Leafly does the same thing as well. But,
Leafly?
Leafly, yeah.
Leafly.
Leafly is actually owned by Privateer Holdings, just so you know.
Okay.
And they use it as their market research tool. But anyways, back to Weed Maps. So Weed Maps is actually kind of part of this little empire that they've got going on. They've purchased a few other cannabis-related brands and companies. One of them is marijuana.com.
Okay.
Yeah. They actually paid $4.2 million for that in 2011, I believe. Probably because of that domain name.
Highly contested.
It was reported.
You didn't laugh at my pun.
But yeah, and so it's, you know, I don't know. I think it's really interesting that there's like this mini empire going on. And then there's another one that's also really interesting, Plume.
Plume? How do you spell that?
Ploom.
Okay.
So Plume is the maker of the Pax vaporizer. Mm-hmm. And so what's interesting about that is that I actually once heard someone from the industry refer to them as the Apple of cannabis accessories.
Oh my gosh.
Yeah. And so the vaporizer obviously is, officially targeted to tobacco smokers. And they even sell their own blends and other things you can use it with. Obviously, it's highly appreciated by cannabis.
Highly.
Yes,
people.
Consumers. And, if you look at it, it's beautiful. It's like it's a smokeless vaporizer, and it has like fancy battery tracker, and you charge it with this
internet connected?
I don't think so yet.
Okay.
But yeah, I mean, it's like this very nicely well-crafted accessory.
How much does it cost?
They have a couple models. They're like differently priced.
As much as a MacBook?
Yeah, totally. No.
Oh, okay.
But yeah, and so they're making really nice accessories. Like we're no longer in the age of like, grungy pipes and things. What else was on the list that was interesting? Oh, as I mentioned Leafly earlier. So what's interesting about that is Privateer Holdings bought them in 2011. And because it's a community of cannabis consumers, they kind of use it to keep their fingers on the pulse of their end market. Privateer's main kind of strategy is premium cannabis brands, so the actual cannabis and accessories. But having that kind of access to their consumers and to see, where they are and what kinds of strains they're looking for and, their behaviors through that community is kind of a really powerful tool, I would say.
Wow. Are any of these companies on the verge of going public?
Probably not. Actually, Weedmaps' parent company is public. It's a publicly listed company.
Wow. There you go. So this is real money, people, not just up in smoke. Well, that's great to learn all about that quote unquote industry, all part of what we bring you every week on What to Think. The What to Think podcast is brought to you from the San Francisco headquarters of our host and sponsor, New Relic, which helps customers make sense of billions of data points about millions of applications in real time. And they went public just now. More than 250,000 users leverage New Relic's comprehensive cloud-based solution to analyze more than 690 billion data points per day across more than 4 million application instances. When your brand and customer experience depend on the performance of modern software, New Relic provides powerful insight into your overall environment, from the web to native mobile apps and more. Learn more at newrelic.com. And now we have Vineet Jain, the co-founder and CEO of Egnyte, a company that provides other companies with software to store and share files, whether in the cloud or in on-premises data centers. So Vineet, I'm thrilled to have you here on What to Think. It's been a big week or so in file sharing land. I'm really excited to talk about the Box IPO, but first let's just set the stage and have you talk a little bit about how you started Egnyte in the first place, as far as I remember, in 2008.
There was 4 of us. I was part of this team. Our simple mission was to replace a physical file server that a company has, no matter what their size, whether it's a server in a closet or servers in a data center, with something that was multi-tenanted and hosted to give you the economies of scale, convert your CapEx to OpEx. But core to our thinking was a very firm belief that what we were calling as the cloud, this multi-tenanted hosted solution, is an important data tier. But the bet we placed was it's not going to be a complete replacement or a substitution for on-prem infrastructure. Both the worlds will coexist. So we have morphed into a hybrid approach where fundamentally you can decide what part of your data should be kept in the cloud, what should be kept on-prem. But from an end user perspective, they get a unified view without really caring about where this is being served from.
One company that's gotten a lot of attention for just doing cloud file sharing is Box, that just went public last week. And we were talking a little bit about it, but we haven't gotten a chance to talk about how you think it went. So give me a sense of whether your expectations were met for a nice little pop, or what you're thinking looking back in hindsight about the IPO for Box last week.
I probably am part of this big crew in the Valley or in the tech world waiting to see when do they go for an IPO, because, it had created the expectations and it was stalled for 10 months that it had almost cast a pall of gloom on a lot of players in this space, even if people would claim, hey, I'm different, I do it differently, Egnyte being one of them. So it was really nice to see them get off the blocks and actually do in a fairly fabulous way. I mean, they priced it very smartly, low, and therefore got a nice pop. So I'm really happy for them and happy for the industry in general. The challenge, of course, is once you're a public company, is sustaining that price point or trying to go it higher, because now the scrutiny is going to be pretty intense, especially with Wall Street.
It seems to me pretty interesting that you could root for a competitor. Does it ever feel weird for you to be like, I want this company to do well, even though I have to deal with them when it comes to winning deals? Is that awkward at all?
No, actually, if you look at from an overall market opportunity, this is still, and I've been saying this for a while, that this is still an immature market. So the total available market size, or the TAM that people like to refer, is incredibly large. In fact, it's expanding almost right like the redshift of the universe. There'll be more than one player doing well in this space. So they created this watershed event. They got off the block first, and they lend a lot of credibility and validation for this industry. So from that perspective, it's positive. And then tied to that, the fact that you're talking about a company, my little company, which has raised only, and I kind of joke only, $62.5 million.
Not that bad.
In Silicon Valley, it's a rite of passage.
It's chump change.
Exactly, yeah. $100 million round, if it's anything less, people scoff at it. So call me the anticlimactic or the classical guy who has only raised 62.5 and competing quite successfully with a company, whether it's Box, which is north of $500 million money raised before they went public.
Yeah.
Or a bunch of other players. It also indicates that there's a different way of how to build a company sustainably, with profitability being a core part of your growth story at the right time, of course, and be there when your success is not epitomized by this big milestone of an IPO. An IPO is just a point in time, because and I know that now what you're a public company, if your stock starts tanking, it's very difficult to get it up, especially in the lockout period that you have as executive officers or employees. So you must have all the fundamentals in place, and that's what I'm hoping to strive towards. So in a nutshell, to your question, I was pretty long-winded. No schadenfreude, very happy for them. We just hope that they maintain the stock price, maintain the multiple, and keep showing the growth.
Well, I just want to follow up a little, because in the past few months, investors have been having this sentiment of throwing money at the startups when there's that opportunity to invest and get really big in the space. And Mark Andreessen was maybe one of the most vocal people on this notion. And I just wonder if you've been fending off, investors who want to pour in $150 million rounds, whatever it might be, however large it might be. There's this notion that money is really easy to get. And I just don't know if you have had the opportunity to go substantially bigger, right? And get in on that huge trend.
There are a few things I'd like to comment on this set of questions. So one is, it's a misnomer or a misconception that money is easy to get. It's relative.
Okay.
Right?
Okay.
It's relatively easy to get because you have to hand it over to the VC community. They are the smartest money managers around. So they won't, go through and just keep tossing dollars around just because they're raising huge funds. I mean, there's an element of that where the valuations are a little bit out of whack, in my opinion. Especially, there's a scramble to get into the late stage companies in order to wait for the next step of a company doing an IPO and therefore make money in the process, even at the late stage. So there is a valuation bubble, I definitely believe.
Like Uber or something like that? What are the companies that you're thinking of when you say that?
I probably don't want to take names here because, you end up creating a lot of enemies. But
okay.
I mean, without naming companies, a company recently went public where their 9-month revenue numbers were $40 million. They were losing $110 million. They go public, they get a market cap of $1 billion. Now, that to me is incredible. Great marketing for them. But
you're talking about Hortonworks, right?
I'm not going and taking names. So, it's just incredible. But at the same time, if you look at why this is happening, is the liquidity that has been created, especially with the Fed printing money like crazy for the past several years. I mean, QE1, QE2, and whatever. And now Europe following suit. Japan did the same. Commodities are completely trash right now. There's not any yield anywhere. So people are chasing yield, and that money is making its way, even from private equity, into early, mid, late stage startups. And I think we are all beneficiaries of this huge flood of money coming this way. And you can see the results, therefore. Now, how long will this last? I can't predict, but I do think that the cycle that began in 2009 has gone on for almost like 6 years. I expect that some rationality will have to come back into the market. And that would be starting off from the public markets, the Wall Street side, before you see that getting impacted on the startup world.
What if Box's IPO had not worked out very well? What if it was like a big disaster on the day of? How would you have felt looking at that as, a company that's in a similar space? What would you have been thinking in that moment?
It can go either way, right? It clearly would not be a good thing because this dark gray cloud would sort of cover all players in this space, even if Egnyte said, look, I'm doing it differently. It's hybrid. It's not cloud only. It's not vertically integrated. But rightly or wrongly, you are categorized in that space. So it kind of creates doubts in people's mind. But for me, it was temporal effect, if it were to go that way, because the way I'm looking at this is, what are my bookings and my revenue targets for this year? And gross margin. People ignore gross margin these days, which is incredible. And therefore, my horizon to be first cash flow break even, then profitable, because those two things are intertwined, but they're not the same thing. And then show 2 quarters of improving unit economics after being profitable, which is when you actually file for an IPO. And that IPO then sustains, irrespective of what's happening in the broader financial market. So with that horizon being around, I would say 18 months, it wouldn't really have made a dent. But it's always good to be in a space where people are all excited and everyone's exuberant and they say, who else is out there? That halo effect, does rub off. So I'm happier if it's positive rather than negative.
So let's talk about Egnyte a little bit more. So last week, apparently you guys announced some new features and a new kind of strategy. Do you want to tell us about that?
6 to 8 months back, we were having some discussions around not just, the sales growth and the go-to-market scaling, but one of the unique advantages that Egnyte has is we are sitting on the perch, watching all your activity, whether you're accessing your data in the cloud or data on-prem. And the cloud could be you're storing your data in Amazon or a Google Cloud or even Azure. And on-prem could be your NetApp EMC, Netgear Synology at the low end. So we have this unique vantage point of looking at the entire picture comprehensively. And therefore, there's a humongous amount of data that's getting generated, all your access data. And the discussion was, what do we do with this data? So until now, we were giving you these audit reports. But this is the treasure trove of humongous amount of big data, as people like to call it, that we have now moved into saying, we can not only collect and analyze, but now we can build smart analytics on top of it, which we are dubbing as content intelligence, and thereby transform your file sharing platform, which is Egnyte, into 2 broader categories. We now help address data management and data protection. So if you combine the file sync and share solution space, which is where we are categorized, add to that content intelligence, that equals data management and data protection. And a simple example would suffice to say, what does that mean? So given our uniqueness about being able to look at your cloud and on-prem, we noticed that 4 of your users have been working on some very large files. And these files are, let's say your CAD/CAM drawings. We could basically create a local cache on a local storage platform like a Netgear NAS device and give your 4 people who tend to be working from an IP address or an IP address range which originates within your office space, and therefore give them the fastest possible LAN access that no one in the industry can do. So the whole idea therefore came from this hybrid strength of ours and then parlay that into data management and data protection.
And if I remember right, this concept is something that your CMO recently proposed. How did you know right then and there that it was a good idea? Were there any other ideas you guys considered?
Yeah, no, Isabel is a force of nature. I mean, I think she's the most technically proficient CMO I've ever interacted with. And we had looked at file sync and share from a market opportunity is $1.8 billion. We're not talking about SMB, we're talking about enterprise.
Okay.
Then we looked at what are the other adjacent spaces in which we can play. There's cloud storage, which is a zero-sum game right now. With cloud storage, you've written about, Jordan, is practically zero, right? Free.
No, you've written about it. You've done an excellent job of
We talked about it, but you wrote, right. And you're seeing that happening. So that's not an interesting category. Cloud gateway is a very small $300, $400 million market opportunity. Collaboration is, in my opinion, a huge category, but it is highly competitive. And there's plenty of different solutions out there. Content collaboration, as people are calling it. So we looked at all these adjacencies and said, which one plays to our strength and where the market opportunity is such that it'll be more attractive to the large enterprise? Because our primary buyer now is either line of business in a very large account or IT or a CISO in very, very large enterprises. So that's how we sort of glommed onto this 2 areas. And Isabel actually drove this whole architecture.
I think one value or one interesting takeaway here is that you guys are using the data that's available that you all have, unlike other companies, because of your ability to work with files in both of these places that you laid out. And I think that the trend right now across various software types is to rub in a little bit of machine learning, rub in a little bit of natural language processing, rub in a little bit of deep learning, rub in a little bit of AI. And I just wonder if you think this area on its own will start to be the next wave of IPO discussions. We talked about, or I named one Hadoop company that just went public, Hortonworks, despite its numbers. And I just wonder if you think this area, as it's providing value or the potential for major value and market expansion, right, for your company, is going to be the next big wave.
I'm not sure if I would say this would be correlated very tightly with the next wave of IPOs. But I do know that this expansion into adaptive services, which is, elements of machine learning, AI, and some of the things you just mentioned, is definitely going to create a much bigger market opportunity. And therefore, moving beyond the EFSS, Enterprise File Sync and Share, and having the DNA to be a full service platform for the enterprise is going to be critical and should get rewarded from a point of view of an IPO. I do think from a general IPO opportunity, the market is still, doing very well, despite small hiccups you see on an everyday basis. I'm talking about the public markets, Wall Street. But I think until and unless something cataclysmic happens, you will see a spate of IPOs get accelerated in the first half of this year, even outside the file sync and share space. I'm sure, you've been talking about it, so I think I'm kind of stating the obvious, but this is the time when, people would say, let's make hay when the sun shines, and definitely the sun is shining the brightest ever.
And how about that other company, Dropbox?
I don't want to be Nostradamus. I got my own shop to mind, and I got my own things to work on.
Okay, all right.
So I have very healthy regard for them, incredible household name. Doing a successful IPO would be further validation of the space. So again, this should layer on to what Box has done if they were to go public. I don't think it'll be negative by any means. It just creates more and more excitement in this category.
It sounds like you're looking at your competitors as like validation for the industry, but at the same time, you're finding comfort in running your business in your own way. So if they mess it up, it's okay because you're doing it differently. Like, is that kind of how you're looking at it in terms of how competitors are doing?
No, you were very eloquent about it. I don't think I could have said it better. Because if they do well, it creates excitement and, the light shines on this category and people look at all of the players. If they don't do well, your differentiation starts standing out. And they say, well, this company is highly capitally efficient. It's only raised 62.5. It's doing gross margin of 68%. And the revenue is in a very respectable range. And they're hybrid. So these guys are different than some of these companies which are vertically integrated. It's their cloud. It's their tools. And I'm not trying to be cute here. I really believe that either way, it should be positive for us, depending on how you want to play this. Because from a marketing angle, what you definitely don't want to do is you don't want to have any schadenfreude against any company. Because to me, that is bad karma. It comes back to bite you. You should focus on what you have to do. And I remember I get invited to this Google CEO Summit, given that we are one of the Google investments.
Sure.
And they invariably always do this at the Computer History Museum. I don't know why they don't change the venue. And also, I have to tell you one thing. They always give you free shoes. I don't know why. Every year, you get free shoes. So 2 years back, they had Michael Moritz sitting in there. And I just love listening to people come out with some interesting thoughts. And given that English is now my first language, I keep writing things down. And he had a very simple thing to say. He said, don't define yourself with what your competition does.
Amen to that. I like that.
Yeah.
And that to me is like, you got to build what you want to believe in. Of course, don't be stupid. Keep companies in the rearview mirror and see what's happening around you. But beyond a certain point, you have your own identity and your own direction that you have to carve out.
I guess our biggest question that we've been waiting to ask you is, when's Egnyte going public?
I got plenty of flack from my e-staff the other day because I made some commentary earlier. And I basically, as I said, those metrics were cash flow break even, then profitable. Then I want at least 2 quarters or at least a quarter and a half, where if I'm about to start pitching and start doing a roadshow, that people see that this company's profitability, gross margin, net profit is improving. So if I lay all those metrics out, then our little company has definitely a shot at going for an IPO in a meaningful fashion, being profitable by, midpoint of next year.
Interesting.
Okay. We'll have you back on the podcast to discuss
I've been on the floor at NASDAQ and NYSE with different companies. NASDAQ is one of our customers, by the way. So I watched and I'm like thinking, wow, this is exciting. And you can take a lot of friends and family there, by the way. So,
okay. Well, we'll be looking forward to seeing the family picture
be aware of
straight
that.
from the floor. Vineet, thanks so much for coming back to talk with us this week after the Box IPO.
Thank you so much.
Yeah, we'll talk to you soon, Vineet. Thanks a lot.
Thank you. Bye-bye.
Thanks everyone again for listening to What to Think. We'll be back next week. Check out VentureBeat.com in the meantime for all the latest news and analysis on tech. Bye.
Bye.